Okay, this lesson is going to explain closing entries. To do this, I have put the worksheet from application 8.1 in your textbook. So we're going to use the numbers from this worksheet, and I'm going to demonstrate how we're going to do the closing entries for this. Closing entries we use to close our temporary accounts in accounting. Our temporary accounts are sales, expenses, and drawing, and income summary. So we're going to close those out. Our first entry is an entry to close income statement accounts with credit balances. So you're going to go to your worksheet and you're going to go to the income statement column and you're going to look at the income statement column, and the income statement account with the credit balance is sales. $6,233. So the entry to close this is going to look like this. Sales, and you're going to close it to income summary. So sales right now has a balance of a credit balance of 6233. Now, in order to close that out or make it zero, we're going to have to debit sales 6233. So our first entry is going to be a debit to sales, and the corresponding credit is going to be an income summary because you close it to income summary. So this is going to be the corresponding credit. So that's our first closing entry, and we'll journalize those in a minute. Our second closing entry is going to be an entry to close income statement accounts with debit balances, and those are all your expenses. And we have, I believe, 4 expenses. And I'm not going to write expense, I'm just going to write what they are. We have advertising, we have insurance, we have miscellaneous, actually we have 5. We have supplies, and we have utilities. And then we're going to close those to income summary. So this closing entry is going to be 6 lines long. So all of these are, let's see, they are 800, 200. This one is 800. This one is 200. This one is 315. Supplies expense is 450, and utilities expense is 1495. Okay, so and then income summary, right now we have currently a balance in income summary of 6233. So our closing entry for this is going to be a credit to each expense for the balance that's in that account. And 1 debit to income summary for the sum of all those accounts, and that happens to be 3,260. Okay, our third entry, our third closing entry, is going to be an entry to record the net income or loss and to close the income summary account. So what we're going to do is we're going to look at the income summary account and what we have currently in the income summary. And we're going to close this to capital. So we're going to look at our first 2 closing entries. On our first closing entry, we had a credit of 6233. And on our second closing entry, we had a debit of 3,260. So if we look at income summary right now, we're going to have a credit balance of 2973 because we have a credit of 6233 and a debit of 3260. So if you subtract 3260 from 6233, you'd have a credit of $29.73. So our third entry is going to be to close income summary or zero it out. So we're going to debit income summary $29.73, and we're going to put the corresponding credit in capital $29.73. Now what this essentially does is it moves our net income into our capital account, because if you look at that amount that you're putting in the capital account, if you look at this third closing entry, it should match the net income that you have on your worksheet. If it does not match the net income that you have on your worksheet, you've done something wrong and you need to go back and take a look at your figures. And the last entry that we have, our closing entry, is going to be to close the drawing account. And you're simply going to close this to the capital account. And your drawing right now has a balance, a debit balance of $1,000. So you're going to credit, your fourth closing entry is going to be to credit drawing $1,000 and debit capital $1,000, because that drawing is going to reduce the amount of your capital. And if you have done a balance sheet already, you will notice that your balance in the capital account on your balance sheet should equal what you've done with your capital here. You've taken the beginning capital amount, you subtracted the drawing, and you added the net income. So it should equal the balance sheet if you have one. So now we're going to take these, what we've put in these T accounts, and we're actually going to journalize them in a journal. Okay, so now we've got application 8.2. We're going to finish up. We're going to take what we just did in the T accounts and we're going to put them in the journal. So closing entries are just like adjusting entries in that they do not have a source document. So you have to title them. So you're going to put closing entries right here, and you're going to do it right on the next line after your adjusting entries. Those are the adjusting entries from application 8.1. And your first closing entry was when you closed out income statement accounts with a credit balance, and it looks like this. Closed it to income summary. The second closing entry was when you closed income statement accounts with a debit balance. That's all your expenses. So we have to write out all of our expenses. And last one is utilities expense. Now when you guys are doing this, you're going to want to go ahead and list all your expenses are going to be credits, because we're closing them out. So they have a debit balance, so in order to close them out, we have to credit the exact amount of their debit balance. Then you would add those up, and the sum of those expenses is what's going to be your debit to income summary. Then your third closing entry is going to be to close income summary and record that net income or net loss. Now with these, we had a 62.33 credit to income summary and a 32.60 debit to income summary in our first two closing entries. So currently we have a 29.73 credit balance in income summary. So in order to close that out, we're going to debit it, and we're going to put that in the capital account. If you had a net loss, these accounts would be flipped, and your capital account would be the debit and your income summary would be the credit. And the last closing entry is to close the drawing account. And drawing has a debit balance of $1,000, so we're going to credit drawing and we're going to debit our capital account. Those are all of our closing entries. Now the next thing you need to do is go through and you need to post all of these amounts to the individual ledgers. Once you have posted all these amounts to all of your ledgers, every account from income summary every account from drawing all the way to the last expense should have a zero balance. If they do not have a zero balance, you've done something wrong. You need to go back and check your figures. And that is the end of the closing entries lesson. Application 8.2.